analysts at Meristem Securities said the weak macroeconomic fundamentals remain the downside of the Nigerian equities markets, while they believe the transition to a new administration may bring some fresh air for the market. Damilare Ojo, head of investment at Meristem Securities, joins me to review trading so far this week. Damilare, thank you for taking the time out to join us today. If you could unmute your mic, please. Well, you did say in your notes that, of course, we're seeing the market in April mostly positive. However, market is still down about 0.5%. Talk to us about those blue chips, I believe, who are weighing on the market.
Yeah, thank you very much again for having me. So far this month, we've had the market being dragged by major tickers heavyweight tickers like Boa Cement and Geregu. So right for the past 2 weeks or thereabouts, just as we had it in the past 2 months, we had the markets closing down. But so far this week, we've had positive sentiment in the market. But today, market has been a bit downward as well. You've been having profit taking, from major heavyweight tickers as well, including Boa Cement again and Ethel Afri. Besides that, in the other 3 days, of this month, of this week so far, the market has traded upwards.
Now, you do believe that, of course, several, as you've seen, obviously, from your analysis, several counters across sectors remain attractive and, of course, continue to sustain perhaps mild to strong buying interest from investors. But many of these companies, as you know, listed on the bourse, are operating in the context of weak macroeconomic fundamentals. Just talk to us about what is separating the winners from the losers. Every quarter we go through the numbers of these companies, looking at their cost of finance, looking at of how they're managing energy costs, how they're managing just overall business volumes, especially for the consumer names. Talk to us about how you see them navigating this environment and what's separating like I said, the winners from the losers.
The major thing separating losers from gainers right now is one, impressive, dividend yield. We are still very much in the earnings season in terms of dividend declaration, dividend payments, closure data, and all of that. And one thing that investors have been banking on or have been really playing along with is dividend markdown. We've seen a couple of heavyweight tickers being marked down over, from March to today. And one thing that has been common in terms of trends that we've been seeing is the fact that when any of those tickers are marked down, you see almost an initial or a gradual, rise back to the cum div, share price. So that is one major thing that has been differentiating the losers from the gainers. So investors have been cherry picking on stocks that declared more than expected dividend. Particularly, I would highlight Access Corp. It is one ticker that declared, the company declared a dividend of 130 kobo, which is far higher than what the market was expecting. And that has led to a lot of buying interest into that ticker. But that's not the only ticker. We also had GTCO, which has also been bouncing back. Of course, there are a couple of market rumors on what is leading to gains on GTCO, but the fact remains that it is a fundamentally sound stock, and after stickers are marked down for dividends, and investors see that these stickers have good dividends, you tend to see buying interest at the ex-div price. So that's one major thing that has been differentiating the losers from the gainers.
Now, are there any stocks, perhaps, as you look through, as you analyze counters across the market that have outperformed so far this year, surprisingly, to your surprise, perhaps didn't do well last year, and for some reason happen to be doing well this year? Any outliers?
Yeah, I think the major outlier, we discussed this last time as well. I think I would highlight to GTCO and Fidelity Bank, particularly GTCO. Right from 2021, when the company transitioned into a notebook company, there was a lot of sell-off. There were a lot of uncertainties about what the future of the old core company is going to be. There was not much communication, clarity in the market about what is going to happen to the company going forward at the time. So there was a lot of sell-off in that stock. So even last year, continue to see GTPO trend downwards. Just try mostly trading sideways. But this year so far, GTPO has been recording gains in the share price. The same thing with Fidelity. Fidelity is one company as well that a lot of investors are also now looking into. And it's actually, last year, it actually outperformed our target pricing. Towards the end of last year, coming into this year, it outperformed our target pricing. And after the release of their, of their financials, we've also revised our own target pricing as well. So that is one other ticker that we are
Right.
looking into. But as yeah.